And joining me for a closer look on what's playing itself out on that market scene is Cremen from Adviceworx. So Caroline, an absolute pleasure. Good afternoon to you.
Hi, good afternoon. Nice to see you.
Fantastic. Let's talk about maybe the week that we're expecting here. We are expecting stuff coming out of the Fed. I think that's probably the big one of the week. But also central banks are still in focus.
Yes, definitely. So this is crunch week because the whole market run up that we've had this year has been kind of based on the impression that the Fed is going to decrease interest rates. First of all, it was March, and then it's kind of shifted to May. I think most people are anticipating we're not going to get an interest rate decrease in March. But what is important, what is coming out tomorrow is the Fed's dot plot. Now, the Fed's dot plot is actually going to show, sorry, not tomorrow, on Wednesday, it's going to show where they anticipate decreasing or in fact keeping rates the same for the remainder of the year. Now, I think what has happened is that the market has shifted its expectations to the fact that there will be interest rate decreases from June onwards. And it looks like you saw the inflation figures last week. You've seen the really strong US economy as it is that there are worries and probably correct perceptions that June may not even be the date. And that those three anticipated rate decreases that were going to happen in the second half of the year are probably going to now only be two. So I think one really should prepare yourself for a little bit of an adverse market reaction because those lofty valuations, especially in the tech sector, are really based on the fact that interest rates were going to come down at least May. So it's going to be an interesting day on Wednesday.
Well, we'll be watching that one very closely. I think it's certainly something that has most of us in some sort of a form of anxiety, Caroline. A lot also happening here at home. I mean, if I just think of all of the companies that have come out with some form of update today. Yeah. Keen to get your thoughts, maybe starting off with the big ones. Thungela out today, reporting a 73% decline in headline earnings. And I guess that's obviously what happens when you don't get to price your commodity. The commodity is priced for you.
Absolutely. And this is, especially when you look, and it's not a small company, but it's not the biggest company either. You don't have room really to cut costs as much as a big Anglo or a big Billiton does, that you can actually kind of smooth your earnings a bit. So you're quite right. It's let the buyer beware when you go into some of these companies. Some of them are very companies, but they just don't have the flexibility when commodity prices are against you.
And then let's touch on Stadio. All key metrics in the green. They're actually just having a good time.
Yeah, I think they're actually in a really good space. I mean, if you look at all the trouble in UNISA, we've got a growing population of people who have the potential to go to university but can't. And Stadio is just in a fantastic position where they can actually cater for that. I think they mentioned in their result they're targeting 56,000 students by 2026. And to that end, they've got a Durbanville campus that they're starting with, and they're really playing it the right way. They're kind of reducing their curriculum, looking at the curriculum that people want. These are professional qualifications. So, it's one of those really wonderful South African companies that have got a good niche, and one just hopes that the economy kind of doesn't completely implode, because this really does has legs and it's going to be really important for society that they carry on. Revenue up 16% in an environment like this where, higher education is a real cost to people, and it's possibly a discretionary cost to a certain extent as opposed to your primary education. So I thought that was a very good set of results, and it just really bodes well for this company.
And then let's move on to Sun International. Income up 7%. Sunbets, I always say the gambling in South Africa is becoming something that is becoming a favorite pastime. I'm keen to find out your thoughts here. Is this an economic indicator of sorts? Our people are starting to really just want to bet a little bit more because there's not much else to do, Caroline.
Well, it's a good point because, our casinos, to all intents and purposes, are kind of safe spaces. You're not going to necessarily get robbed or mugged in a casino, so people do tend to trend there. It's an economic indicator to a point. So just gambling, it obviously is affected by economy. If people got less to spend, they're not going to gamble as much. But it's a surprisingly resilient form of entertainment. So when you start to see gambling turn down, then you really know the economy is in trouble. So I think the fact that the earnings are up, the income is up, the usage of the casinos is up is actually a relatively good sign. The consumer is hanging in there by their fingernails. So this is partly Sun International's doing. They've got a good portfolio of assets. They've got good cost management. And what was really great to see there, and I hadn't really realized that about Sun International, got such a good free cash flow conversion. So income just coming in, and it's just generating free cash flows. So that's. I was really impressed with those results. It's for a change for Sun International.
I'm actually keen to then that segue straight into your stock pick, Caroline. It's all we have time for today. Keen to get which counter you're loving today.
Okay, so I'm liking this counter, but I'm liking this counter for two reasons. Number one is we're probably going to get a bit of market friction after the Fed. We've also got the Rand actually looking relatively strong at this point. So for people who haven't been able to access dollar assets or haven't done so, there's an exchange-traded fund run by 10X called the 10X Total World Stock Feeder Fund. And its code is global. What it does is it's got about 9,000 companies in it, but it's about 61% in the US. So it allows you to access hard currency assets in Rand. And what I love the diversification. I love the idea that people really should get more foreign assets because South Africa not so much. But the expense ratio on this fund is only 0.28%, which is really competitive. It's even internationally competitive. So if you do not have dollar assets, you cannot access dollars directly, but you have rands. This is a really nice asset to add to your basket.
Well, it's been a pleasure having you this afternoon, Caroline. Thank you so much for your time. That was Caroline Cremen from Adviceworx.